Hello and welcome. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Wednesday, October 14th of 2020. Let's get through some topics of the day, what markets are paying attention to, and more importantly, we're going to have some answers. So a lot of questions clients have been asking, so thanks for watching. So our first topic of the day, got cash, question mark. You know, a lot of clients have been asking lately, outside of the investments that they have with us here that we're managing directly at Blanke Schein Wealth Management, we increasingly get phone calls of frustrated clients with their bank CD deposits. They constantly say, Rob, what's happening? And ultimately, we know that the Federal Reserve has basically taken interest rates to close to zero, 25 basis points at best for the Fed funds rate. That being said, they've also indicated for the foreseeable future, not just the end of this year, at the end of 2021, but not only that, but even in the middle of 2022, will they consider starting to raise interest rates? Well, for those clients and friends and family, those people that have cash outside of what we're working with here at Blanke Schein Wealth Management, that's a serious issue because ultimately you're not having your money work as hard as you. And that's the whole name of the game. Ultimately, here's the deal with regards to having your money work harder. The playbook that the Federal Reserve, monetary and fiscal policy are actually embarking upon right now is a re-inflationary trade, okay? It's economics 101. They're doing this on purpose because it's essentially there's no other alternatives because you can't have your money in cash. And I'll give you that example in just a second. They're doing this on purpose because they want the cash outside the banks. You're seeing real estate as residential. Real estate's reporting record numbers in terms of increasing in prices, but geographically across the United States as well. It's just on fire. Well, that's an inflation trade. You own real estate to stay ahead of inflation. Again, that money moves out of the banks because banks are paying us nothing. Let me give you an example here. If you have $100,000 right now in the bank, let's say in a CD that just came due, the bank's going to offer you 25 basis points on that. Let's say it's another 5-year CD and you want to reinvest that. Well, at the end of that $100,000 5-year investment, the bank will give you back $101,256.27. So just about $1,256 on the $100,000 for 5 years. Inflation right now is well ahead of that pace. Again, by what the fiscal and monetary policy, essentially policymakers are doing. Not only here, but around the world. It's a coordinated effort as I keep bringing our daily updates and bringing this effect. You also want to own real estate. You want to own real assets. Gold and silver are doing well too, but ultimately you're seeing the equity markets take off and everyone's questioning why they would do so when it's disconnected from the economy. Well, corporations are making money and those corporations are also making money work harder than the cash that's on the balance sheet. In fact, cash is super cheap right now. So ultimately, we are seeing on a daily basis clients bring us cash from banks to look at alternative opportunities to see what different asset classes and rate of returns we can explore that would be appropriate for them. Now let's just look at a 5% as an example of a simple 5%. You know, years ago we could get 5% on our CDs. In fact, a lot of the CDs that are coming due now, had a 5% coupon on them, and now they're reinvesting at 25 basis points. But let's look at that 5% simple interest compounded on 100,000 over a 5-year period of time. Well, instead of the 101,000 that you would have at 25 basis points, you would actually have 27,628.16 cents. Let me repeat that. Essentially, it's a $26,000 difference, actually more than that. If you look for dollar compounded on 25 basis points, 100,000, or in the other alternative, if you got 5% compounded annual rate of return. $26,000. That's significant. And what's even more significant is you want to make certain that your money and your cash specifically is working as hard as you are. So if you're looking for alternatives, we can discuss that. We're happy to do so. That's the number one question we're getting from our clients right now of those assets that are outside of what we're directly managing here at Blanke Schein Wealth Management. We're happy to have that conversation and decide what's appropriate for each and every one of you. So we welcome that. So thank you. Again, the next one is overdoing fiscal stimulus, if you will, overdoing the fiscal response. Well, we have seen by the negotiations back and forth from Congress, ultimately Republicans are giving more, the White House is giving more, Democrats are holding on to a high number, and they want to continue to get even higher, I believe. Ultimately, that's going to be pushed past the election, it looks like. In fact, markets sold off earlier today when there was reports from Steve Mnuchin, Treasury Secretary, saying that they're going to cool down some of the talks. They're not going or progressing as many as would like. So the market is sort of disappointed in that. That's why we saw markets sell off from a positive to a negative. Ultimately, we will get some sort of fiscal response. And ultimately, what we do know, and markets are sort of anticipating this, the response will probably more likely be overdoing it. And again, going back to the original conversation I started with this, if you have money in cash in banks right now, that's probably going to be a loser over the next 3, 5, 10 years down the road, considering different alternative asset classes. Because when they basically stimulate the economy, they're inviting inflation. We're seeing that in used car sales, new car sales. We're seeing that in retail. We're seeing it all CPI numbers right now. This economy is heating up. Again, remember, we came into 2020 with one of the hottest economies by measured on every matrix that we've seen in quite some time. You add about a $7 trillion sort of jumpstart boost, and then now finally we're reopening. The market is seeing through to 2021, 2022, and it's knowing that economies can reopen and they will never close down to the extent that we did originally when we didn't know what we didn't know as it relates to this global pandemic. So you take all of that together, we watch corporate earnings. Corporate earnings, again, are on a tear for the third quarter. So they made more money in the third quarter when everything was slowly reopening across the United States. I can only imagine what we're going to see going forward. So this is all exciting news on a go-forward basis as we see this play out for our clients in a very positive manner in the wealth management space. So that's what we have for you today. Those are 3 topics we'd like to discuss. Again, we welcome friends and family and any additional items you guys want to discuss. Keep sending us your comments and we'll hit those on a daily update. Take care. Have a great day.